Hi, everyone, and thank you for joining our market update for this week. I'm going to go through the live price action as we are recording so that you can see everything that's going on right now. So just bear with me for one moment, but follow my pointer because this is European stock markets, which are open today already on Tuesday. And as you can see, a bit of a mixed performance. Strong outlier there in the FTSE 100, but overall not much movement, too much movement, not too much of an exciting day. However, that belies some really interesting developments that are going on. But so far, overall stock indices are fairly quiet. But one thing I want to show you is the S&P 500. So the S&P 500 at the time of recording is not actually open, but it had a fairly decent Monday, and it's had a really, really strong rally. If we just look at the rally from April, where my pointer is, all the way to today, so the start of June, this is a record recovery for any stock index in the US. So the S&P 500 has risen more than 20% since its decline, since the low in April. That is a record time frame. To do that in just over a month is really astounding, and it just shows you the demand that is there. Now we can see that actually on this chart. This is a candlestick chart. As you can see, a really nice uptrend going on. What do we look for in these uptrends? We look for a series of higher lows, which allows you then to kind of draw a really nice line higher. We're also ahead of these moving averages. Now you may have heard me bang on about how nothing good happens below the 200-day moving average. Well, we are firmly above it right now, and that looks like some really good support there around that 5,800 level. But the big news, we are above 6,000. So that means that we are only about just under 150 points now away from that record high that was set on the 19th of February. So we've really seen a turnaround in stocks. And now people are starting to look towards that record high. What will it take us to get there? Well, the key thing that's driving markets at the start of this week is some hopes for a resolution to the US-China trade standoff. They are talking in London. We had the talk start on Monday. We didn't get any concrete agreement from the two countries. So they've carried on to the next day, and they're going to be ongoing all day. So we may not hear anything until Tuesday night, or maybe even into Wednesday if they go on for another day. The longer the trade talks last, I suppose that suggests that the sides are getting on well and they've got a lot to discuss. So maybe there's more hope of of some sort of trade deal coming, because we certainly are priced for perfection. Some would argue that we are looking for a resolution of the trade frictions between the US and China, not just some patchwork. I think if that happens, then the market could be disappointed quite quickly. But for now, we are seeing a very powerful uptrend there, and there's not much that's able to get in the way of it. I'm going to pull up the VIX, which is the volatility index. So you will probably always hear from us talking about volatility, about how you need to manage it. Oh, just bear with me there. I'm just putting it on now. The VIX index measures volatility in the S&P 500, and it has been really trending lower, and it is currently at 17. That is below the average of the last 12 months, which comes in at 18.75. So low volatility really supports that view that the S&P 500 just moves nicely and orderly towards that record high of about 6,150, currently about 150 points below there. But looking at what's really been driving the S&P 500 in the past month, because we've obviously seen a huge move higher. So it's actually a very, very diverse mix. So we've seen a super microcomputer, as you can see with my pointer here. This is a company that holds a lot of Bitcoin. So Bitcoin has been rallying, and that has helped push super microcomputer to 34% gain in just 1 month. Now that is absolutely huge. It's the same with Micron Technology as well, up nearly 30%. Coinbase, now that is a crypto exchange. And that is higher by 28%. And then we've got some generals, semiconductor stocks, Dollar General as well, that's been thrown in there. So that just shows quite a broad range. But there's definitely in the past month of that uptrend that we've seen in the S&P 500. It has been linked to some Bitcoin plays. So kind of Bitcoin buying stocks are doing very, very well in the S&P 500 right now. I'm going to turn this into sectors because I know some of you like sectors as opposed to overall indices. And actually, we've got a lot of electronics and we've got semiconductors index here. So really what it suggests, this rally is being led by tech. So semiconductors index up by nearly 20% just in 1 month. I mean, that is fascinating and fantastic. Now I'm going to switch play here to what's going on in the bond market. So follow my pointer. This shows you the change in bond yields, sovereign bond yields around the world. So let's look at Europe. Big outlier there. Remember, when bond yields fall, that means bond prices go up. The UK, a 7.8 basis point drop in the 10-year UK bond yield. Now, we're used to seeing something quite the opposite with UK bond yields sometimes going up, 7.7 basis point drop for the 2-year. This is all because of the weakness that we saw in the UK labour market. So we really are seeing a big softening in the UK labour market. We've seen over 200,000 jobs lost since the budget in October. Part of that will also be because of the employer national insurance rise. We saw an uptick in the unemployment rate to 4.6%, and we're generally seeing weakness in wage growth as well. So that's really opening the door for more rate cuts from the Bank of England. Now, I'm just going to show you the pound. Pound has been really, really strong. This is just today's chart, so a very, very short-term chart. We had dipped as low as 134.60, but we've actually backed back up there, hovering around that 135 mark. The high from today anyway, it was 135.60. So we've definitely taken a knock from that payrolls report. But if we zoom out, it tells us a very different picture, right? We're zooming out, just bear with me there. Yes, as you can see, yes, the pound has pulled back for sure, but we are at a very high level for the pound versus dollar. So this is the cable rate. Now, part of that weakness in the pound is because this is just daily returns for the dollar in the G10 FX space. So the dollar is making gains against a lot of these moves. Now, just bear with me. I'm just going to adjust that this time frame. So we are seeing just a broad-based movement in the dollar, and that is higher. But if we look at the dollar index chart, so this is the dollar against its biggest trading partners, we are very much trading at the bottom. So it's just short-term gains in the dollar, led by hopes that we're going to get some good resolutions out of those trade talks between China and the US. Now, I just also want to show you before we go Tesla. We spoke a lot about Tesla. We saw that massive decline last week after there was a public spat between Donald Trump and Elon Musk. Now, that's quietened down quite a lot. And we have seen a bit of a recovery in Tesla. So it has recovered. It was up a further 3% yesterday after rallying about 5% on Friday. But what is clear is that we haven't recouped all of those losses. We are trading around that 200-day moving average, though, at 305. Closed yesterday at about 308. So we closed above that 200-day moving average. Now, that could be a bullish signal. We've obviously got overall risk positive environment, low volatility, and tech stocks are very much leading the way. Now, that is positive for Tesla. So that is something to watch when that stock opens today. Momentum is on the upside. Now, the key drivers of US stocks yesterday were liquidity and low volatility. So they're the kind of the things driving the markets at the moment. So unless we get some very unexpected bad news potentially from these trade talks or some other piece of bad news, then we could see Tesla continue this recovery because it has made that technical break above the 200-day moving average. So we've got that. We've got a slightly stronger dollar. We've got some weakness in the pound, but that's benefiting the FTSE 100 because remember, 70% of UK stocks make most of their revenues outside of the UK. So a weaker pound helps that boost those revenues when they convert them back in the UK. The US, European stocks are fairly quiet, but I think we're looking for direction. We've also got tomorrow a really important US CPI report. Do follow us because we will be following that. Now, that's all for me for now. We will be obviously updating you throughout the week on those really key events, the update from that US-China trade talks and also the US CPI report on Wednesday. So thank you so much for joining, and please do